Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. Chris Lento. Chris Lento is founder and managing member of EM Capital LLC, and they focus on acquiring commercial multifamily apartment complexes in markets across the country that exhibit positive growth trends. And we're going to dig into that. Ladies and gentlemen, please join me in welcoming Mr. Chris Lento. Welcome, Chris.
Thanks, Ray. I'm happy to be here. I'm excited for a good conversation.
Yeah, we're very excited too. Looking at your background, you've got a lot of good stuff in your background. So we look forward to talking to you about that. And we look forward to talking to you about the future plans that you have as well. To kick things off, why don't we start with an elevator pitch? And for those who are new to the ROI Clear podcast, Chris Lento is on an elevator with someone he wants to influence. So, Chris, what would you say to that person in the course of an elevator ride?
I suppose I would say I own a multifamily investing company where we partner with high net worth individuals and accredited investors to buy high quality assets that give consistent return that's a high risk adjusted return. And I think what makes us different is that I started my career as an engineer, and I take that discipline that I learned through an engineering and project management background, and I apply it to multifamily in a way that yields a lot of value.
Solid. And you did your bachelor's in mechanical engineering.
Yeah, bachelor's and master's. Yeah.
Bachelor's and master's in mechanical engineering. Why don't you connect the dots for us, please, from mechanical engineering, bachelor's and master's degree? Clearly, you're smart and disciplined. Connect the dots for us, please, from there to what you're doing now in multifamily.
Yeah, sure. So, went into college. I was always very mechanically inclined, kind of math, science, and also hands-on. Did some, light construction stuff in summer jobs here or there, and went into mechanical engineering. Really enjoyed it. Learned a ton in college. Came out, got a job at a research and development and kind of defense contracting company here in Cambridge, Massachusetts.
Mhm.
And I enjoyed it. Very interested, a lot of military work, a lot of Navy work. And almost immediately, I moved into an apartment here in Boston or in Somerville, Mass, which was next to Cambridge. And it was a three family, three apartments stacked on top of each other. And I looked at what we're paying and, knew the guy who owned it. He was this electrician. And I'm like, how does this work? This is a lot
Mhm.
of money that we're paying, and we're only one of three apartments. It was a four bedroom.
Mhm.
And I just got interested right away. Started reading books. There was no podcasts or at the time, but started reading
Right.
books about it and talking to other real estate investors doing, and there really weren't a lot of meetups at the time. Really, there was like, real estate investor clubs that you defined, but just dug in. And 2 years later, I borrowed some money, squirreled some money away from my job, and bought a three family in East Boston, which is sort of at the time, more of an up and coming neighborhood, less expensive. And that neighborhood was taken off, went really well. I lived in one, managed the other two, um, refied that with a cash out, bought another one up the street about 2 years later. So right around the time of the crash, I had
Mhm.
7 units that were all, cash flowing very strongly. I was living rent free, managing them myself. When we had the financial crisis, which I did, have some regrets. My paper worth went way down, but I
Yes.
cash flowed the whole time. No real issues came out of it. And I've, since sold both of those properties. I converted one to condos, and I sold the other one during COVID actually for, very large upsides. So that's sort of how I started. And then, as I was going through my career in aerospace, I was always doing this on the side, kind of
Yes.
scaling it up. And I had thought of it as like a retirement plan or just a kind of a augmented, extra income. And it
Mhm.
wasn't until I sort of, through podcasts and certain books, got turned on to just and got comfortable with the idea of bringing in other people's equity, which
Right.
really allows
Right.
you to scale it up at a rate that it's very hard to do if you're just, using your salary and using rental income. So at the same time, I sort of got the bug for larger properties
Mhm.
and started evaluating, well, hey, Boston is a very low cap rate market. It's
Oh yeah.
expensive.
Yeah.
What about other markets? Are there other markets that have, similar rents that are less expensive, or, the rent to price ratio is better, which is
Mm-hmm.
effectively a cap rate, right?
Right, right.
Um, so I looked at some tertiary markets of Boston, did a test run of a market, Salem, Massachusetts, which is about an hour north, and I sort of treated it like it was a far away market. I hired
Mm-hmm.
third party management. I only went there once a quarter. I sort of trusted them to manage issues and use the phone and kind of some Zoom at the time.
Yeah.
Um, and then once that went really well, I 1031 that into a property in Florida, and that's where I started really going outside of my home market to markets that had better cash flow opportunities and were growing faster.
Right, right. That's a wonderful story. You started off in Cambridge, Massachusetts, where you were working. You were in one unit of a three-unit apartment property owned by an electrician. You looked at that and you said, he's an electrician. I'm a mechanical engineer. You said, my name is Chris Lento. I'm clearly smarter than this guy. Or I don't think you said that. I'm being a little bit of a smart aleck when I say it that way. But you saw an opportunity to start buying these kinds of properties yourself. So you started off with a three flat, you bought a four flat, you had 7 units total when we hit, what do they call it? The GFC, the global financial crisis.
Yep.
And your observation was that even though on paper, the value of the assets had gone down, and that paper evaluation, it is just what somebody says what it is. I agree with you that the cash flow is more important because it's the cash flow that took you through the GFC. And while a lot of people were panicking and biting their nails, you could see that, yeah, maybe the properties went down on paper, but my cash flow continued to be flowing and stable and predictable and reliable. And I would argue there's a lot more value in stable, reliable, predictable cash flow that comes on the first of every month than on a valuation assigned by an appraiser, right? And
Oh,
clearly
absolutely,
you
right.
found that, yeah.
Yeah, and if at that time I could have got some debt, I would have bought more.
Oh, yes. Yeah, yeah. Right, right. But debt had dried up around then, right?
It
Everyone was
had.
afraid and panicking. And then you grew from there. You went into another property, 1031 that into a property in Florida. And where are you now in terms of units? How many doors do you have now?
We have 610 units
Yes.
across 5 states. And then, after I'd been in my career for 15 years, I had a big enough real estate portfolio and had some investments, and I could kind of see the whole career path. I could see the
Hmm.
where I could go in this company, and I did a lot of traveling, and I worked for the Navy a little bit, and I
Yes.
could see what all the other companies in the defense industry were doing, and what those career paths looked like, and none of them appealed to me. It was just not what I
Wow.
wanted to do, with the rest of my career. So I made a plan to scale up and transition to full-time investing 6 years ago.
6 years ago, you went full time. And do you look back? Do you think, oh, maybe I should have done that W-2 and gotten those promotions and the gold watch after 25
I
years?
don't. No, I think I should have done it earlier.
There it is. There it is. That's I love the way you connected the dots there. And one of the things that is really appealing about you, that I respect about you, is that part of your mission is to alleviate. I'm going to use this from your words, from your bio. I'm going to read this word for word because I love the way you express this. Chris is passionate about the role that well managed, well maintained economic housing can play in helping to alleviate the current housing crisis for middle and low income families. There you go, solving problems right there. There's your engineering background, solving problems. Can you unpack that for us? There's so much power in that sentence from your bio. Tell us a little bit about the motivation behind that.
Yeah, sure. So, um, there's a lot of low income housing programs out there. Like there's LIHTC and there's Section 8. And when I was in Boston, we had a lot of Section 8 tenants, or not a lot. We had a maybe 10%, 15% Section 8 tenants. And I just thought it was a very good program. It's not as popular in the Southeast markets that I'm in. The properties tend to be either fully Section 8 or non-Section 8.
Mm-hmm. Mm-hmm.
Um, but there's a lot of discussion right now about the missing middle, so it's not low income housing and it's not kind of expensive market rate. It's what are middle class families do that that don't qualify for low income housing, but are very stretched by, market rate housing. So
Mm-hmm.
one of the things we're doing, and many of our apartments are full market rate, and we're trying to, max revenue on the rents. But what we're trying to do is find programs that help the economics work for our investors, because we need to give a good investor return in order to raise capital,
Mm-hmm.
but also can help, with these middle income properties. And one thing that we've, come across in the last couple of years is that the Carolinas have very good real estate tax incentives if you partner with a nonprofit that's focused on affordable housing, and you agree to rent limits that are defined by an area median income requirement.
Mm-hmm.
You can eliminate your real estate taxes. So that is a program we've done on two of our properties in North Carolina that has
Yes.
really helped out on these kind of middle income properties. In Charlotte, they're renting for $1,100 for a two-bedroom, relatively inexpensive, but the residents don't qualify for low income housing.
Right, right. That's amazing. If you go in and you're renting at a certain level, your real estate taxes are eliminated. That's powerful. Now, tell me, number wise, and you can ballpark it, what have you. What does that do? Clearly, that improves your cash flow, because if you're not paying real estate taxes, most of the time when we're doing underwriting, that is the biggest expense item. I mean, yeah, debt service may be bigger, but that's going to be the biggest expense item. That's going to be the biggest expense item. Yeah. What is that doing for your cash flow? Like number wise, what are you seeing? Your cash on cash return. What are you getting, or what are you getting in terms of
Yeah, I mean,
IRR?
we have two properties that we've just implemented it in Raleigh and Charlotte, and it's dramatically increased the cash flow.
Hmm.
I think we're saving on one of the properties $3,000 a month on a 60-unit property, which is
Yes,
the equivalent of two or three extra units
it
per
is.
month that we're
Right.
we're saving. And the other benefit that we've seen on our end is that we're working with the agencies, so we're refinancing it right now with Freddie Mac, and um, they're acknowledging that zero tax in our refi. So we're getting a better refinance rate and leverage with our refinance.
Holy cow, your DSCR is improved because of that.
Exactly.
Sweet.
Yeah, so it
Sweet.
doesn't
Yeah.
work for every property, and it's
Yeah.
got a lot to do with what the area median income is and what the economic situation of your target renter market is. But for the right property, it can work very well.
I like that. That's a clear example of doing well and doing good at the same time.
Yeah, and the intention of the rule is that it motivates owners like myself not to tear down a garden style and build a Class A property, or renovate to the point where you're pushing out middle income families.
Got it. Got it. What does your team look like? I mean, most syndicators, they've got acquisitions, asset management, and capital raising. How have you structured your team to do your deals?
Yeah, we're pretty lean, and we leverage our strategic partners to kind of
Hmm.
expand our scope. So in-house, we have three full-time people and a part-time marketing person. So we have
Yes.
an acquisitions slash asset management person, an admin assistant, and myself, and then
Hmm.
a part-time marketing person. And then
Yes.
we have two strategic partnerships, one that primarily does capital raising. They
Hmm.
have another business, but they have a lot of high net worth individual connections. And then
Yeah.
another company that's very similar to us, and they really shine on acquisitions. So we sort of work together, and really because of my engineering background and just who I am, our company's core strength is really asset management,
Yes.
project management, asset management, metrics tracking. That's really where I shine, I think. So we leverage, our strategic partners and their strengths. Now we also do acquisitions, we do capital raising,
Hmm.
and asset management. But as a
Right.
as a group, we do larger deals, basically.
Got it. Got it. And what's your buy box?
I'm looking at 12 to $50 million acquisitions,
Hmm.
um, built later than 1980,
Hmm.
and 100 plus units.
Got it. And any particular part of the country?
Yeah, we're looking in the southeast. So
Southeast.
North
Yep.
Carolina to northern Florida, kind of the 85 belt, and then plus Tallahassee and Jacksonville.
Yeah. Got it. All right. All right. Yeah, I like the way you define that. You said because of your background, your mechanical engineering background, you have a very tightly defined area of expertise, like asset management. You're very strong at asset management. Yes, you can do capital raising, and yes, you can do acquisitions there, but you know you're very strong with asset management. I would even argue that because you're really good with asset management, that's attractive to investors for you. I
Yeah, no,
mean,
I
investors
agree.
look at
I
that.
mean, I
Yeah.
can answer the questions.
Oh yeah, yes, right,
Uh,
right. You don't have to, oh, let me get back to you about that. So there you
right,
go. You've had
exactly.
experience. I bet you can not only answer the questions, but probably tell a story in your answer. Like, yeah, and by the way, we had an experience with that question. If someone asks you about something that's going on with a roof or a boiler or a chill, well, no, you're doing 1980s or later, so you don't deal with boilers or chillers, but you can talk about mini splits or
Right,
HVAC units or heat
exactly.
pumps. Yeah,
Yeah.
all of those.
And we do
Yeah.
have some unique assets. We have a couple of 1930s built converted commercial properties that have been
Yeah.
turned into apartment buildings. One's an
Okay.
old bank, one's an old school. So they have some interesting mechanical systems, and we have a cell phone tower on the roof of one, which was an adventure and has really worked
Yes.
out for us. So sort of extra revenue opportunities. So our
Yeah,
core
yeah.
focus is 1980 plus, but we're open to opportunities.
What advice would you give to someone who wants to pursue a cell phone tower as another revenue stream?
Find an agent. So
Mm,
there's people out there that their full-time job is, putting revenue sources on your roof. So whether it's
yeah,
billboards, cell phone towers, and find multiple because they all have different relationships with the different cell phone carriers and with the
sure.
different advertising vendors. And they may tell you, oh yeah, we know them all, but they know, the Atlanta contacts, and there's different
Mm,
contacts in Charlotte. And so trying to figure out who knows kind of the right people to ask, and then be very patient because
yes.
like the Verizons and we have a T-Mobile tower. Um, when they were expanding 5G, they were out there looking for places to put 5G.
Mm-hmm.
But you just saying, hey, I have a roof and I'd like someone can go park on it, it could take years for them
Sure.
to
Sure.
find someone that's interested. And then it's a process to get
Yeah,
it
yeah.
to get it installed. And it's not a small project either. This, I would say the equipment for this T-Mobile probably weighs 2 or 3 thousand pounds. There's a lot of stuff on our roof. And
Did you have to reinforce the roof at all?
we
Or was
didn't,
it?
well, they made like a mounting stand for it
Yes. All
that like
right.
spread the weight correctly.
Right. Right.
Yeah.
But you
And
know
we
what I
do,
love about that? Even though you, with your background, I mean, certainly as a mechanical engineer, you know how to do free body diagrams and you know how to do structures. I mean, you studied that in school, but you delegated that to someone else, straight out of the book "Who Not How" by
oh,
Stuart
absolutely.
Hardy.
Yeah.
Yeah, and it also gets back to the pattern that I'm seeing with you, which is really exciting, very cool. You have that very tightly defined area of expertise right around asset management, which is very much asset management. A lot of it is delegating to other people, knowing what needs to be done, but making sure that other people do what they need to do, making sure the property manager does what they need to do, or your renovation experts, all of that. I see that.
Yeah, absolutely.
And
I'm very good at connecting people. So I can understand, a lot of different languages and kind of connect the dots, and tell when they're not lining up as well.
yes. Okay. When they're not lining up. Okay. Yep. Yep. That's straight out of I think of Charlie Munger, who used to say, if you have an area of expertise, make sure it's small and tightly defined, not big and fuzzy. So you have your tightly defined area of expertise. If I was going to draw you as a diagram on a sheet of paper, I would center tightly defined area and maybe going out, connect the people with their areas of expertise. You know, your cell phone people, your property managers, your acquisitions people, capital raisers, all that. So yeah, I'm getting it. All
Yeah,
right.
absolutely. And it's funny you
Yeah.
mentioned Who Not How. I have that book on my, actually I have 3 copies on my desk because I give it out quite a bit.
Yes. That. Yeah. I love that book. Powerful book. Powerful book across the board. So, given everything that you're doing, and what you're doing is helping to solve the housing crisis, as you mentioned. You know, we're running into that right now. You're using your capitalist skills, your business leadership skills to help solve that. What's next for you? Because you've done so much from your engineering career. Now, you started off low key in real estate. Now you're over 600 doors across the Southeast. What's in your vision? What's in your sights right now for your?
Yeah, so we want to kind of have a two-pronged approach for the future. We want to grow our multifamily business to
Yes,
larger properties, less properties, but more doors for
got
economies
it.
of scale.
Mm-hmm.
And then additionally, we're starting to look into retail and industrial as an asset class
Hmm.
for a couple of reasons. One, there's a huge insourcing going on in the country right now between the Inflation Reduction Act with all these incentives for clean energy technology
Hmm.
and manufacturing locally in the US.
Mm-hmm.
And additionally, there's some, kind of noise happening in China about tariffs possibly going up. And I think that
Mm.
there's going to be more manufacturing coming back to the US. It seems like we're in kind of a global nationalist cycle where a lot of
Yes.
people are starting to kind of look inward.
Mm-hmm.
And I believe, and a lot of people do as well, that it's going to result in a lot more manufacturing in the US,
Right.
which is going to drive a lot more industrial requirements in the
Okay.
future. And then additionally, the move to online retail
Mm-hmm.
drives a lot of warehouse space needs. You
Got it.
have your storage, you have your last mile. I think there's a rule of thumb that Peter Linneman always says that, every dollar that goes or every square foot that goes online requires 3 square feet of warehouse space between all the different logistics requirements of those online
Really?
deliveries.
So
Right.
that's why here in Arizona I see so many warehouses. Like I drive around here in the West Valley, in Avondale, Goodyear, all Buckeye out here. You throw a rock and you hit an Amazon warehouse.
Right. Yep. Well, if it needs to be in your door, right, in 24 hours or 12 hours
Yeah.
sometimes,
Yes.
it
Yeah.
can't all be in the middle of nowhere. It has to be local.
Has to be right there because that customer sees those socks online and got to have it right
It
now. Bring
needs
it
them
to
for
me
some
by
reason, right?
drone. Yeah. Okay. So that's
Exactly.
what you mentioned. You retail. When you say retail industrial, are you saying retail and industrial or
Retail and industrial, but
retail
only
and
certain
industrial? Okay.
categories. So for
Okay.
retail, we're starting to look at kind of retail strip centers, anchored like grocery store anchored retail strip centers, things like that. And we're just
Yes.
sort of look into that. And one of the reasons that I started looking into that is, multifamily has a ton of competition.
Mm-hmm.
And, as you know, in the last couple of years, it's been very slow.
Yeah. 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 Challenges.
So
Yes.
the idea is that we want to be able to give diverse, opportunities for our investors to have
Yeah.
consistent investments. So if we have a knowledge of multiple spaces, that spreads out that area,
Right.
and it gives
Right.
us investment opportunities. We're sort of early days on that, but it's looking promising.
For the retail, are you looking at doing ground up development or will you take an existing center and improvement and improve
Existing
it?
center. Yeah, very similar to a multifamily approach.
Okay.
Small retail centers, nail salons,
Yes.
restaurants, maybe a government agency in there, like a post office, or
Yeah.
we're not looking at single tenant like a Starbucks, something
No
like that.
Starbucks. Yeah. Okay. Got it. Because if that tenant leaves, my goodness, that's 100% of your occupancy gone
Right,
and they're highly specialized. You would need another Starbucks or a competitor. Yeah. Yeah. I can
right.
see that. Different,
And
different
those have
ROIs.
very low cap rates. Buying a single tenant Starbucks with a 10-year lease is very low cap rates.
Right. Right. I'd imagine that's probably because of that name. So many people are competing for that name.
Yep,
There it
absolutely.
is. And then with industrial, of course, I like what you mentioned. Every dollar spent online, three square feet of industrial space is required.
Yep, absolutely. And that's kind
Okay.
of a similar, I'm looking at sort of a, flex space. So maybe you'll have, 10 to 20 bays that have a high bay and an office space that you could have a landscaping company, a welding company,
Right.
some sort of online distribution company. Um,
Yes.
so it's got a multifamily overlap to it where you have multiple tenants um,
Right.
that, limits your vacancy risk.
Yep. And you're not committed to any one single vertical market.
Exactly.
Okay.
Yeah.
And then the exposure on the retail, I know one exposure on retail is, oh my goodness, if you're selling a retail product, Amazon might try to sell it. How do you compete against How do you compete against Amazon? Like you have a
Yeah,
retail
no,
store.
absolutely. So a lot of those small retail strips are experiential, right? They're nail
Mhm.
salons, they're hairdressers,
Okay.
they're gyms. They're markets that Amazon's not, going to compete with.
Yeah, yeah.
Their bars, restaurants.
Okay.
Sometimes the main anchor might be a church in
Yes,
some of these strip centers. So
sure.
yeah, we tend to focus on retail that's not product based,
Got
not
it.
bookstores.
Something that Amazon can't deliver. Amazon's not going to deliver a good workout with six-pack abs over a
Exactly.
UPS or
Right.
whatever in a
Right.
box. They don't even use UPS. They use their own deliveries. So yeah, there we go, right? That's exciting. And then with industrial, I see absolutely growth there. So you're taking the expertise that you developed going way back to that three flat in Cambridge, Massachusetts, and you're applying it to the 600 plus units you have right now. And moving forward, you'll be doing retail and industrial, making sure you don't compete directly with Amazon because you'll be doing experiential tenants. And for your industrial, you'll have multiple vertical markets that you're servicing so that if something happens with any one of them, you're still in good shape.
Right. And the
Wow.
industrial, it tends to be small businesses, right? So you have a number of small business owners that have their sort of local niche. You can evaluate them as you typically have the opportunity to see their books, evaluate how profitable they are and what the risk is.
Yes. Yes.
Um, so
There it
that's,
is.
and then the other thing is that they're business owners, right? They're going to improve the property. They need new electrical service.
Mm,
They're going to put it in, let you know. So it's a very different tenant base
yes.
than
Yeah.
multifamily.
We're gonna have to have you back to dig into that. We're coming towards the end of our time together, and this has gone quick because you have so much experience and so many fascinating things that you've done in business and in real estate that I really want to drill down into. So this has been great for me. I know maybe it feels like an interrogation. I'm just I'm just a
No, no, it's
curious
been
guy.
great. Yeah.
Okay, there we go. As we close out, clear leader. I mean, you mentioned how are you reading or listening to that to recommend to our listeners and viewers?
Um, I think Principles by Ray Dalio was a really
Mm,
good book. It's
mm-hmm.
long, but it's got a lot of good nuggets in it. If there was
Yes.
like a Cliff Notes version, I think that would be great.
All
Um,
right.
so that's probably a good one. Um, yeah, and then like I mentioned, Who Not How is one I always recommend because it's an easy read and it's a very powerful concept.
Got it.
I'd
I
stick with
got to
those
read
two.
Principles. So many people are recommending that. And Ray Dalio, anytime he's speaking anywhere, I like pause and listen to him,
Yeah, absolutely.
and he's got a
Very big
great first
thinker.
name. He has the most awesome first name I've ever seen anywhere.
It's a solid name.
There we go. And then finally, Chris, how can people get in touch with you?
You can find me at emcapitalgroup.com. That has all my contact information. And you
Got
can
it.
email me at chrislento@emcapitalgroup.com.
Wonderful. Well, Chris Lento, it has been a pleasure having you here on the ROI Clear podcast. It's been great talking to you, and I look forward to having you back at some point.
It's been great talking to you as well. Have a great day.
And thank you for engaging the ROI Clear podcast. At ROI Clear, we buy multifamily apartment properties, we improve them, and we give people a great place to live. At the same time, we give investors an opportunity to enjoy capital preservation, tax advantages, and a solid return on investment. If you'd like to know more, click the link to roiclear.com down below. We look forward to speaking with you.